Today, we're diving into a financial topic that hits home for many people. What can you do if you're struggling with credit card payments? Specifically, can you pause those payments? And what are your options if you're feeling overwhelmed by credit card debt? Credit cards can be great for emergencies, but they can also become a source of financial stress. In fact, over the past year, 9.1% of credit card balances have fallen into delinquency. So if you're having trouble keeping up with payments, you're definitely not alone. Let's talk about a few strategies that might help you pause payments temporarily to get a breather. First up is credit card forbearance. Some credit card companies offer this option, which can pause your payments for a limited time, usually around 90 days. During forbearance, some companies may even waive late fees or lower your interest rate, though your balance might still grow in the meantime. But here's the catch. Qualifying for forbearance often depends on your situation. If you can prove you're experiencing financial hardship, like losing a job, the odds of approval are better. So if this sounds like it could help, your best move is to call your credit card company directly and ask. Just be clear on how they'll report this to credit agencies, so you're not caught off guard with any impact on your credit score. All right, now let's talk about the more extreme option, bankruptcy. This is usually reserved for those in serious financial trouble and should be considered only after looking into other options. There are two main types, Chapter 7 and Chapter 13. With Chapter 7, you sell off assets to pay debts, and you're free of creditor payments after that. Chapter 13, on the other hand, involves creating a payment plan to pay back over time, but you get to keep your assets. Keep in mind, though, filing for bankruptcy has a long-lasting impact on your credit and comes with costs like hiring an attorney and seeing a credit counselor. So it's definitely not a decision to rush into. Another option some people consider is debt settlement, where a company negotiates with your creditors to lower what you owe. But before you get excited, here are a few things you need to know. For one, you usually have to pay the debt settlement company, and there's no guarantee they'll succeed. Even if they do, you might have to pay a lump sum at the end, which could be taxed as income. Plus, there's a risk that your credit card company could sue you for stopping payments during negotiations. So, while it might sound tempting, debt settlement can be a pretty risky route. So, let's say you get some breathing room and start heading toward a healthier financial position. You might think about canceling some of your cards to avoid future debt, right? Well, be careful here. Canceling cards can impact your credit because it affects your available credit limit and potentially shortens your credit history, which can lower your score. But if you know keeping that card open will be harmful to your finances, canceling might still be the best option. Just weigh out the potential impact on your credit and maybe consider other strategies, like transferring the balance to a lower interest card. Managing credit card debt is tough, but remember, there are options out there. Whether it's forbearance, a debt settlement, or even bankruptcy in extreme cases, what matters most is finding the solution that fits your situation best. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more financial tips and insights. See you in the next video.